Welcome, ladies and gentlemen. In today's video, we discuss the mention of Ripple as a big money transfer provider and the XRP ETF, as well as the promised update on market situation. Let's get started. American banker names Ripple alongside Western Union, MoneyGram as big money transfer providers. Ripple earned a mention alongside other major cross-border money providers in a recent American banker piece. Article on Yahoo Finance from American Banker mentions 5 alternative cross-border payment companies, including Ripple. The article rather obviously links to articles about each of them, except those about Ripple, said Rathoff in his tweet. Payment-focused blockchain company Ripple was recently named one of the leading global cross-border services providers in a recent piece published by the prestigious magazine American Banker. The article covers a move by the popular UK bank HSBC to expand its global money transfer offerings through a newly launched app, Zing. While acknowledging that Zing represents an effort by HSBC to rival non-banks, the piece mentioned other companies building out cross-border payment functionalities. It named major UK providers Wise and Revolut, both boasting a combined 46 million users. Next, Ripple came in third for its blockchain-based payment infrastructure, which has enjoyed adoption from major banks looking to facilitate near-instant cross-border transfers. The piece noted how Ripple has used its technology alongside XRP for years, as well as the recent consolidation of the company's solutions into a single offering called Ripple Payments. The American Banker article suggests that the recent consolidation intended to address Ripple's attempts to build international networks for digital cross-border payment processing. Meanwhile, rounding up the list of the top 5 global money service providers are traditional companies Western Union and MoneyGram. Recall that the latter previously had a partnership with Ripple but distanced itself from the project amid the infamous lawsuit by the SEC. Ripple maintains a competitive edge. The latest Ripple mention, while omitting a link, reveals how the company has earned its place among the elites with its blockchain-based payment solution that uses XRP. It also comes at a time when Ripple has revealed ongoing efforts to maintain its competitive edge. The inclusion of Ripple alongside traditional heavyweights like Western Union and MoneyGram in an American Banker article is a significant recognition of the company's impact in the global cross-border payment sector. I interpret this mention as a testament to Ripple's successful penetration and disruption of a market traditionally dominated by established financial institutions. Ripple's blockchain-based payment infrastructure, especially its use of XRP for facilitating near-instant cross-border transfers, represents a paradigm shift akin to the advent of digital banking in the early days of the Internet. Traditional companies like Western Union and MoneyGram have long been the standard bearers in the money transfer industry, much like brick-and-mortar banks were in the financial sector. Ripple's entry and subsequent recognition alongside these giants signify a new era where technology-driven solutions are not just complementary but central to the financial services industry. The consolidation of Ripple's solutions into Ripple Payments is a move, streamlining its offerings to better address the needs of international networks for digital cross-border payment processing. This approach mirrors the evolution seen in other technology sectors, where companies have streamlined and integrated their services for greater efficiency and user accessibility. Moreover, Ripple's positioning as a top provider in the American Banker piece, despite the lack of a direct link to articles about the company, underscores its growing prominence and acceptance in the financial world. This kind of recognition, albeit subtle, is often indicative of a broader industry trend where new technologies gradually gain recognition and acceptance, much like how electric vehicles have slowly but steadily gained ground in the automotive industry. However, it's important to note the context of Ripple's mention. The company's inclusion alongside HSBC's new app, Zing, Wise, and Revolut, indicates a competitive landscape that is increasingly diverse and tech-driven. Ripple's blockchain solution, particularly in the era of digital transformation, positions it uniquely compared to traditional providers. Move on to the next news. Expert says XRP ETF is unimaginable until this happens. A prominent figure in the XRP community has argued that the outlook of an XRP ETF will remain elusive until a pivotal development surfaces. Pro-XRP crypto influencer Rathoff Kahneman took to X to share this sentiment. The context of his observation was the impact of crypto exchange-traded funds set to debut in 2024. It is worth mentioning that the U.S. regulator must decide on pending Bitcoin spot ETF applications in the first week of this new year. According to WAC, the arrival of crypto ETFs is poised to usher in a new era of market volatility, driven by a confluence of factors. WOKE first consented that crypto ETFs will see institutional funds entering the crypto space, predicting their influx would play a pivotal role in shaping the market. Specifically, the analyst highlighted the likelihood of heightened volatility. In his words, crypto ETFs in 2024 mean volatility. He attributed it not solely to the substantial influx of institutional capital, but also to the emergence of arbitrage opportunities between the ETF and the underlying cryptocurrency assets. Furthermore, WAC pointed out the scarcity of companies housing ETF and crypto operations under a single roof. According to the analyst, this separation may intensify arbitrage opportunities as investors look to capitalize on price differentials. In this context, WAC alluded to the cautious approach that might be taken with certain cryptocurrency ETFs like XRP. Before XRP ETF can materialize, specifically, WAC suggested that the legal case involving XRP could delay or hinder the introduction of XRP spot exchange-traded funds. In other words, the analyst believes until the SEC's lawsuit against Ripple settles, the chances of an XRP ETF remain slim. A few months ago, an ETF analyst at Bloomberg underscored the importance of incorporating XRP into a derivative platform as a prerequisite for the potential development of an XRP ETF. The Bloomberg analyst suggested that having XRP futures listed on the Chicago Mercantile Exchange, CME, could lay the groundwork for the eventual authorization of an XRP ETF. The analysis presented by the XRP community figure Rathof Kahneman regarding the prospects of an XRP ETF is both insightful and reflective of the complex dynamics at play in the crypto market. I concur that the realization of an XRP ETF is intertwined with a multitude of factors, especially the ongoing legal challenges faced by Ripple. The entrance of institutional funds into the crypto space via ETFs would indeed significantly impact the market, reminiscent of the effect that the introduction of gold ETFs had on gold markets. This parallel is apt considering how gold ETFs revolutionized and expanded access to gold investments, leading to increased liquidity and price movements. Similarly, crypto ETFs could attract a new wave of investors, creating both opportunities and fluctuations due to the influx of capital and the emergence of arbitrage opportunities. The mention of arbitrage opportunities between ETFs and the underlying crypto assets is particularly noteworthy. This phenomenon could lead to a situation akin to the traditional stock market, where discrepancies between an ETF and its underlying assets often prompt swift trading actions by savvy investors. In the crypto market, where price movements can be more volatile, these opportunities could be even more pronounced, potentially leading to heightened market activity. Regarding the specific case of an XRP ETF, the ongoing legal battle between Ripple and the SEC is undoubtedly a significant hurdle. The uncertainty surrounding XRP's regulatory status and the outcome of the lawsuit makes the prospects of an XRP ETF more complicated compared to other cryptocurrencies like Bitcoin or Ethereum. The suggestion that XRP's inclusion in a derivative platform, such as the Chicago Mercantile Exchange, could pave the way for an XRP ETF is a logical step in its market evolution. Just as futures markets for commodities and stocks often precede ETFs based on these assets, establishing XRP futures could provide a regulatory and operational framework that might ease the path towards an ETF. Those are my thoughts on today's news. Let's move on to the review. Well, Bitcoin has decided to fool everyone after all, including me, and go with the less possible scenario. In yesterday's video, I said that this is unlikely to happen, and I was wrong. It's a crypto market. I can't be 100% sure of anything, and neither can anyone else. If someone tells you they are 100% sure about something related to crypto, they are lying. Despite all this, the outcome is still not clear. On the one hand, Bitcoin has consolidated above 44,000, and on the other hand, the second scenario from yesterday's video, where I said Bitcoin would first rise to 44 and then fall to 38, is still valid. Maybe it went a little bit higher just on pure buyer enthusiasm. After all, it's still not worth 46K. We've got some short liquidity forming at the top here, maybe we'll go up to it a little bit more. But it seems to me that we don't have the strength to go further. Look at the previous green candle, it is quite big and full-bodied, and the next one has already left a big shadow on top. All in all, it's just wait and see for now. The dominance has risen nicely from 51% to 52.6%, but this is only due to the dump on January 3rd, so that doesn't tell us anything. Now let's talk about XRP. Of course, it has bought back a lot from the bottom by 27% and consolidated above 0.577, but it is still just breathing down Bitcoin's neck. We will not see any supernatural movements in the next 5 days until the fate of ETF and the entire crypto market is decided. This is a time of high volatility and anything can happen. Watch Bitcoin and the levels. Do not hurry to make decisions and carry all your savings into crypto. No analyst can tell you what will happen in the next 5 days, and even more so after the SEC decision, whatever it may be. I will keep you updated anyway, but just a warning. Be careful. Don't jump in on the highs and only then will everything work out perfectly. Write in the comments what else you'd like to see in the reviews and in my videos in general. Thanks. See you in the next videos.